In this video, I'm going to show you 5 dividend stocks that are currently on my buy list. And looking at the overall market, it is fair to say that year to date the market has treated us very well. We see some decent returns down the line for most companies, and we're still mid-earning season. So without further ado, let's dive into this list of 5 stocks. Kicking things off with one of the most interesting companies as of lately, American Express. This stock reported earnings on the 24th of January, and the investors had mixed feelings. The stock went down a little bit, but on the 1-month chart AXP is still up a decent 6%, outperforming the overall market. And American Express is a 225 billion market cap company, and the third player in the dominant credit card field, together with Visa and MasterCard. PE ratio is at 22.75, which is actually looking pretty good, especially if you compare this to Visa and MasterCard, who both are trading at a premium. Revenue is at 64 billion, and in this graph we see that revenue really exploded ever since the lockdown periods. But one concern that I do have are the margins, who took a big hit most recently. But lucky for us, both the net margin and operating margin are increasing again. Looking at their dividend stats, we see that AXP pays a shy 0.88% dividend yield, but it is all about the growth for this company, with an 11% 5-year compound annual growth rate, which is the most important part for me here anyways. And down the line, I'm really bullish on this stock, and in the coming periods I'll be doing a full deep dive, and for now AXP remains on the buy list, and I can't wait to pull the trigger. Another stock that I'm really bullish on is TROW Price, ticker symbol TROW. I just covered this company last week, and the main reason why is because I think most people are sleeping on this stock. On the 5th of February, TROW is expected to report earnings, where most analysts expect a miss, so that's looking really interesting. Year to date, the stock is moving very steadily and managed to outperform the overall market. TROW is a 26 billion market cap company and PE ratio is at 12, indicating they are undervalued. But keep in mind, most companies in this industry are trading at a low PE ratio. Revenue is at a shy 7 billion, and in here we see that TROW managed to get back on their feet and start growing again. Their margins also took a big hit, but we also see that they are increasing again, which is the most important to me. And now we get to the most interesting part, and probably also why investors are buying TROW stock. Dividend yield is at 4.24%, which is an insane number. And payout ratio is at 55%, but keep in mind that this number is going down again, which is looking really good. The growth stats are also really impressive, with a high growth rate and also 38 years of consecutive increases. And down the line, I'm really bullish on this company, and I can't wait to buy more shares. It's already a big part of my portfolio, but they are just looking really good in terms of value and dividends. Next up is the stock that most investors are talking about as of lately. VICI Properties, a REIT that owns a big part of the Las Vegas Strip. This stock is up roughly 3% year to date, but took a big hit late 2024, hence why people are closely watching this stock. Earnings were looking pretty good last time, and for the upcoming earnings are scheduled for late February. VICI is a 31 billion market cap company, and since this is a REIT, it is not fair to use the PE ratio, so we focus on the price to FFO instead, which is reported at 11, indicating VICI is undervalued. Revenue is at 3.8 billion, and in this graph we see that revenue went up a decent amount in the recent years, but growth is slowing down a bit here. Margins are growing again in the short term, which is exactly why people are loving this company so much, and so do I, especially since the margins are crazy high in general. And since VICI is a REIT, we see a juicy dividend yield of 5.8%. Payout ratio is actually a bit on the lower side here for a REIT, since it is below the 75% average. Growth stats are also looking really good for a REIT. And down the line, I think there is a clear reason why people are not only talking about this stock, but also buying. They are looking undervalued and pay a massive dividend, hence why I am also buying this stock, even though it is already my biggest REIT in my portfolio. And now we're going to talk about my latest buy, and also for the first time on this channel I will be talking about this stock. Blackstone Secured Lending Fund, ticker symbol BXSL, a non-diversified closed-end management investment company. This stock is really finding momentum year to date, and by the end of this part you understand why. BXSL is a 6.83 billion market cap company, with a PE ratio at roughly 10, which is actually not too bad. But keep in mind that companies like BXSL tend to have a lower PE ratio in general. Revenue is at 733 million, and in this graph we see that revenue is growing really steady and consistent. And keep in mind that it is still relatively a young company. Margins are coming down a bit, which is something to keep your eye on. But with the company growing at a high rate, this is actually something that we expect. And now the part where you're going to understand why I love this company. Dividend yield is at 9.2%, which is crazy high of course. PE ratio is at 85%, which is of course on the higher side. But it is expected with these type of companies to see an average of 80%, so it is actually looking pretty good. They also have 3 years of consecutive dividend increases, which is only because they are a young company. And to be honest, I own this stock because of that crazy high dividend yield. I already have 2 other high yielders in my portfolio, and I want to diversify it a bit more instead of only having 2 high yielders. This will minimize my risk in the end because, of course, it is a high risk, high reward stock. And as I said before, this is my most recent buy, and I expect to slowly expand my position in the coming periods. And moving on to another high yielder, we have ARCC, another favorite of mine that caught some attention from investors lately. This stock also found some momentum this year, but on the 5th of February they are going to present results where most analysts expect a miss, something to keep our eye on. ARCC is a 15 billion market cap company, with PE ratio at 9.5. And again, companies like ARCC tend to have a lower PE ratio, but it is still looking pretty good to me. Revenue is at 1.8 billion, and in this graph we see that revenue went up in the long run. And the thing that I like the most here is how steady and consistent this company is. Looking at their margins, we see that they are going up and down a bit, but are most of the time within the same range, also looking pretty good to me. And ARCC is one of the other high yielders in my portfolio. With a 8% dividend yield, this company packs with a punch. Payout ratio is similar to BXSL, that we discussed before, and that 80% is again around the average. They have no consecutive dividend increases according to Seeking Alpha, but they managed to report some growth in the past 5 years. Down the line, I'm really bullish on this company. The valuation is looking really good and performance is really steady and consistent. Dividends are amazing and I'm planning to buy new shares this month. I think in this day and age there are still lots of opportunities that are undiscovered by the bigger audience. And that's a good thing for us investors. These 5 stocks are on my radar for a longer period of time now, and some are already in my portfolio. The main reason why I'm thinking these stocks are a buy is because of the valuation and the great dividend stats. But I'm also very interested in the stocks that you're currently buying. So please let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.